Good evening, everybody. Thanks for coming out. I call to order this special called meeting of the Bethany City Council for Tuesday, December 17th, 2019. Would you please rise for the invocation and the flag salute? Please join me in prayer. Heavenly Father, I thank you for the opportunity to try to help lead this city and our people. I ask that you give us wisdom and that you would give us courage. And I thank you, Father God, by faith for success that you bring. We thank you in Jesus' name. Amen.
Amen. So join me in the flag salute. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
We have one item on this special meeting. It's a public hearing item. This is the second meeting regarding our budget. This is discussion and presentation by Crawford and Associates regarding the budgets of the City of Bethany and the Bethany Public Works Authority, as well as other funds of the city and its public trust, including but not limited to revenues, expenditures, operational costs, sales tax revenues, debts and required debt service, capital and infrastructure needs and cost, transfers between funds, and the limited revenue resource. I'll turn it over now to our city manager, Brad Brown.
Mr. Mayor and City Council, we have engaged a firm called Crawford and Associates. They've are a well-known accounting firm in Oklahoma that deal with municipalities, and we have a lot of respect for the information that they provide. And we've asked them to prepare information and a presentation for this special called meeting, and I would like to call Frank Crawford to give that presentation.
Thank you, Mr. Brown. Thank you, everyone, for making time in your busy agendas to talk about a subject that's usually not terribly popular, which is municipal accounting. I usually don't get an audience full of citizens when we talk about accounting. It's usually a terrible, boring subject. But what the administration has asked me to do is kind of walk you through a little bit about budgeting. And it looks like we've lost our presentation on the screen, so we may have to rely on handouts or...
We can take just a minute and correct that if you'd like.
Well, we'll see. Hopefully we'll get it back up.
Yeah, I think you have some help on the way. So
good.
Let's.
Regardless, what we're here to talk about is kind of budgeting in general and municipal accounting and municipal budgeting, and kind of compare and contrast that with maybe what you thought it was or what it was not. And hopefully the goal at the end of this evening is that we will be able to take a picture snapshot of not only what you had planned to occur for this fiscal year, but also where we kind of are after about 5 months of the fiscal year, which is not quite mid-year. But we've got some indications of what's going on. And budgeting, although it might look somewhat complex from the municipal perspective, if you kind of hammer down into the details, you can kind of make it make sense. And so what I'm probably going to try to do tonight, along with my counterpart, Brenda Wright, from our office, is try to simplify this to the point where we can look at it both from a big picture perspective, and then if we need to drill down into that big picture a little bit better, to give you an idea of what it looks like from a 30,000 foot level, and then maybe what it looks like from a closer level from those that may be present here on a day-to-day basis. So that's what we're really going to talk about, and I can probably do this presentation in about 4 hours. But lucky for you, I've shortened it a little, so that we're not going to take 4 hours. But I have had to basically trim a lot of detail out of this simply because if we tried to go into a line item detail, we're just not ever going to really get done with it. So I'm just going to talk while we're working on the slides, a little bit about budgeting in general and the reasons why we do it. First of all, the required reason is that we have to do it. It's required by law. It's required by Title 11 statutes, of which what governs municipal government throughout the state of Oklahoma. We're not just a municipal government, though. We're actually made up of a couple of different entities, a couple of really large entities. The Bethany Public Works Authority, which I understand is truly a separate legal entity, but also governed by you as the trustees of the trust, is very much a part of the city's entity also. And so when we talk about budgeting, we talk about city budgeting, and then we talk about other entities like public trusts. Even though the laws are different about the budgeting and the content and the way they look like one another, we're going to kind of treat them the same tonight, just from a management perspective, and talk about a budget for what it really is, which is kind of a plan. The budget is really management's best guess of what's going to happen over the next 12 or 13 months in advance. Because by the time you adopt this budget, the next year has not even began. So not only do you have to estimate a full year's worth of revenue and expense, you have to also estimate what you're going to start the year with. And that's going to be one of our key issues tonight that we talk about, is trying to nail down where we actually were at the end of the prior year so that we know what we're beginning the current year with. So the required reason is basically that we have to. Now, desired reasons are all over the board. As I said earlier, it's a plan. It's a plan that gets started about in February of each year, even though the year doesn't begin until July 1. And that gets started with department heads analyzing their budgets and trying to determine what their needs are, bringing those requests to management, and management simply trying to prioritize those requests based on the direction that you as the council and those of the citizens have provided you to do. And so we're establishing budget policies. We're establishing budget priorities by doing those budgets. And I think there we're back up, so we should be in good shape. And sorry, I was just going to advance it.
Yep, just
Sure, should be able to do that. We talked about the first bullet. Well, let's say enter key. Okay, well, it is advancing on the screen. It's just not showing up on the big screen. Why budget? Well, there's no answer, I guess. That's what we'll stick with. As I had said, some desired reasons, spending priorities, one issue. Setting the legal spending limits is another. Governments are not allowed to spend more than they say they're going to spend. So once you establish a spending limit by fund or by department or wherever your legal level of control is, that becomes the limit until you change it or you amend it. And the good thing about the municipal budget law is that since this was a plan and it had to be adopted well before the year began, we get to amend it as many times as we want or as we need to as events occur. So the budget, although we talk about it as being the item, it's not really the item. The item is what actually happens. You can budget all you want as to what you think's going to happen, but we all know things don't usually go the way we plan it, and so therefore we have to modify those budgets, and that's what we have the ability to do. And so another reason that we do it is basically to determine what taxes, rates, and fees that we need to set. If you want to boil it down to some simplicity, there are probably two main sources of revenue to most municipal governments in Oklahoma, and that is sales tax and utilities. One you have control over by being able to set a rate for a service that you provide. The other, sales tax, you have no control over whatsoever. It's all contingent on basically how sales taxes are paid via the city to the state, and how the state, from the citizens, the state then reimburses the city or sends those sales tax to the city governments. And so, yeah, I don't know why it's not showing up, but maybe we can just go to you can't advance it at all. That's incredible. Usually never happens. Again, another reason that we do the budget is simply because although we can't affect the sales taxes that we collect other than by simply trying to encourage people to buy within our city limits, we do have the ability to set utility fees. I'll probably do a lot of comparisons tonight between accounting and something else that's not accounting, just because it seems like we understand food or clothing or other items much easier than we do accounting. And so I'll probably make several references tonight to different inanimate objects that basically will represent accounting as we go through this. But we'll talk about rates and fees, and remember, we've got dozens of rates and fees. Oh, we're up. We have dozens of rates and fees in place, but remember, we probably don't control a lot of those that have a material impact, because literally about the only thing we have control over would be utilities. Another reason is that this plan allows us to budget the municipality's finances. As we're going to learn here in a little bit, this is a very simple mathematical equation at its base. And once we learn that equation, we're going to be able to apply it across the city and across what we call fund accounting, which I'll describe here in just a little bit. Lastly, one of the reasons that we budget is for fiscal sustainability. We've got to be able to continue along providing services to the citizens based on the revenues that we have available to us. And when those revenues perhaps don't come in or are not available to us, we have to figure out where we're going to not spend certain monies. You won't hear the terms profit and loss or retained earnings or corporate income statements and things like that in the governmental world, because the governments are typically not concerned with profit loss. What they're concerned with is figuring out how much money they have available to them in order to provide services to a government. Let's imagine a giant barrel, and that barrel is full of cash. How is it that we're going to appropriate that cash to be spent out in the community and providing services, but yet still leave enough in the barrel at the end of that year to take care of emergencies or one-time things we didn't expect, or better yet, to save some for next year to help us balance next year's budget? And that's what the focus of a government is. It's not so much about making money or losing money, but what money do we have available to us, and how are we going to prioritize its spending? And so that is why we go through the budget process. So a little bit of insight as to why we do it. There are various roles throughout the budget process, and I've tried to outline those on this slide, and I know it's kind of difficult to see, but there are several different roles that people play. So let's start with the parties in the process, and we'll start at the municipal staff and consultant level, such as our firm. We provide input on revenue estimates, expenditure requests, department requests. We assist with maybe budget preparation. In other words, a lot of detail work begins at the staffing level. In order to accumulate all the department head requests, somebody's going to organize that process. To begin the prioritizing requests, somebody's going to organize that process. Ultimately, that basically yields what you end up adopting as a budget, but it has to go through a number of different steps and a number of different legal deadlines in order for you to get there. The detail work, though, is done at the staffing level. Technically, the budget is the CEO's budget as it's presented to the governing body. That CEO, we don't use that vernacular very much in the governmental world. Typically, we call them city managers in most cases. In some governments, we have aldermanic forms or strong mayor governments where they function as a CEO, but you have a city manager. So technically, this is the city manager's budget that they present to you as the governing body and to the citizens. The citizens have input through public hearings to describe to the governing body and the governing body's representation of those citizens as to what they believe are the priorities, and then the governing body sets the direction for that budget, and the city manager executes that budget direction. The state auditor has a role, but it's mostly just a filing role. Once you adopt that budget, you will file a copy of it with the state auditor's office. I'm probably certain that not a whole lot happens with that budget at the state auditor's office, other than they check a box that says you have filed your budget with us. And since you also have general obligation bond debt in which you levy a property tax for to pay off the debt service, you're also required to file what we call an estimate of needs with the county so that they know how much property tax to levy as opposed to whatever else they would levy for schools or for the county's operation. While we're on property tax, let's talk about that for a second. We municipalities in the state of Oklahoma are unlike any other municipality in the entire country in that we as cities are not allowed to levy a property tax for operational purposes. If you go to any other city in any other state and you look at their budgets, they'll have three main streams of revenue: sales tax, utilities, and property tax. And if they don't have a balanced budget and they need more revenue, they just go raise the mill levy a little bit, and that balances the budget. We don't have that ability here because of a long political process that began years and years and years ago before I was even involved in all of this, where the county governments basically got with the city governments, and the county governments agreed not to levy sales taxes if the cities would agree not to levy property taxes. Sounded like a great deal, except the local government side got set in law while the county government's promise did not. So now we see county governments that are levying not just property taxes for themselves and the schools, but they also hit us for an occasional sales tax or a portion of a sales tax. That option's not open to the city, though, to levy. The only way the city gets to levy a property tax is when the voters have approved the issuance of a general obligation bond, like you have for your library, and then you're allowed to levy a property tax just enough to pay off the debt service, nothing more. No operational monies, nothing else. So that leaves us with two major streams of revenue to balance the budget. And so, again, that's the roles that we all play. It's ultimately a team effort, but again, it's designed to reflect the priorities of the council with input from the citizens for what those priorities should be, brought to the manager to execute that direction with the detailed information researched and brought together by the staff. So we have not been involved in your budget process at all. In fact, we are kind of new to the city in that we came in about a year and a half, maybe almost 2 years ago, maybe at the end of 17, maybe early 18. And we've been doing some specific things that management has asked for related to the annual audit or some internal audit work, but the budget is not something that we've been designed or asked to review until just recently. And so this is our first look at the budget and the first look at the budget process. Once we kind of put these down and we figured out exactly what's going on within the budget, I thought it would probably be time to get together with the governing body and to discuss what it is that we're seeing so that if there is future action that needs to be taken, you're aware of kind of where we are and maybe what you need to start thinking about from this point forward. We still have a good 7 months, roughly 7 months to go for this fiscal year to June 30. So we're roughly not quite halfway there, but we're getting pretty close. We've cut our analysis off at basically the end of November. So that way, whatever I'm seeing in your financial statements, I can kind of see up through the 5 months ending of November since we started July 1. So with that, we'll move on and we'll talk a little bit about my favorite topic, fund accounting, which is, again, unlike anything anyone else uses. If you were to walk into a corporate entity and say, I'd like to see your financial statements, they'll probably hand you a balance sheet, one income statement that shows their revenue and expense, and they might produce a cash flow statement, and that's it. Whether it's IBM or Xerox or Apple, there's a balance sheet, an income statement, maybe a cash flow statement. In government, we have dozens of balance sheets, dozens of operational statements, and a few cash flow statements, because the government works as if, here I go with my analogy, Imagine I was wearing a pair of pants, except instead of 4 pockets, I had 17. And in each one of those pockets, I have money, I have cash. Except that 2 of the pockets are really big and deep pockets, where most of my money and most of the activity is going to occur. And the other 14 or 15 or so pockets have some money in it, but those monies are restricted or dedicated to something unique or something special where I simply just can't use it for regular operational purposes. And that's what we have to do, is we have to budget all 17 pockets. So you're going to sit down every year and you're going to figure out each pocket's going to have so much money coming through it. What is it going to begin with? What's going to come into the pocket? What's that pocket going to spend? And what's going to be left over in that pocket at the end of the day? But it doesn't really matter a whole lot from a money perspective, simply because at the end of the day, I've still got 1 pair of pants and it's got X amount of money in it. And it doesn't matter how I shift the pockets around or how I transfer them around, it's still got the same amount of money at the end of the day. And so some pockets we can shift money around and some we can't. We just have to spend what's there and use that money for its restricted purposes. That's fund accounting. Just think of it as an ugly pair of pants with 17 pockets, 2 of them really deep ones. So in the city's accounting system, I'll literally look in and I'll see up to 17 different balance sheets, 17 different operational statements. You could produce a cash flow statement off every one of them if you wanted to. And then each one of those are basically tempered by a fiscal plan. Here's what we think this pocket's going to do. Here's what we think this pocket's going to do. Here's what we think this pocket's going to do. And that's what the government does on a day-to-day basis, is manage those pockets. And once the budget starts deviating from what we actually thought was going to occur, that's when we have to start rethinking our priorities, rethinking how much we're going to spend, whether we're leaving enough money in that pocket at the end of the year to carry over for next year. But you have to do it 17 times because you've got, in theory, 17 funds, 17 budgets. But again, remember, maybe 75% of all of our activity is flowing through these front 2 pockets, and that's where the bulk of the activity is going to be. And those are the bulk, the 2 funds you're probably going to spend the most time talking about. And that's probably where we're going to spend our time talking tonight. So enough history of accounting and history of fund balance. Here's the magical, complicated mathematical equation to all accounting. If you can understand this, you can understand any concept taught in the world of accounting. Because regardless of what we're reporting on, whether we're a corporation, a government, a nonprofit, a manufacturing company, it doesn't matter. We always start a period, a year, let's say, with a certain amount of money that was carried over from the previous year. We in the corporate world used to call it retained earnings. Earnings from previous years that we've retained because we haven't spent them. So it's really, retained earnings is unspent revenue that you're retaining to spend in a different day. In the government, we don't call it retained earnings. We call it all kinds of different words. We call it net position, fund balance, carry forwards, reserves, contingencies, I've heard them called. We use all kinds of different names, but the idea is that we have to figure out when we're budgeting for next year or any year, what are we going to start with? Then the next equation is, how much do I think I'm going to collect? That's our revenue number. That's the first 10 that you see in the equation. The second 10 is, how much are we going to spend that year? And then magic math takes over and produces an outcome that's the ending number, which then magically rolls to the next year as the beginning number, and we start the whole process over again 17 times. Because we got to do this 17 different times for all of the funds that the city has. So this equation is literally the root of all accounting. We start with something, we bring in new money, we spend that money, and then math takes over and tells us what we end with. So 1 plus 10 minus 10 equals 1. And so in this equation, we can basically say whoever created this equation must have decided that 10% looks to be what we need to end the year with. Because we started with a 1 and we ended with a 1, which means that the revenues and the expenses for that year must have matched. A lot of people will call this a balanced budget. Balanced because the 10s equal in the middle. I could unbalance this equation and still produce a balanced equation. Let's say that I decided to change that second 10 to an 11. Does the math still work? 1 plus 10 minus 11 equals 0. The math works, right? Not a terribly wise decision, because now I've left myself no margin for error, no carry forward, nothing to start the next year with, which is not realistic. So even in that equation, if I were to spend $1 more than I earned that year, it's still balanced as long as I had $1 of savings or reserve or carry forward or fund balance. As long as the math works, it's balanced. It'll work the other way. If I collect 1, if I start with 1 and collect 10 and spend 9 and end with 2, that's still a balanced equation, right? Because the math works. And in some years, you might want to budget that way, where you're not spending everything that you collected that year, because why? Maybe I need to build up my reserves. Maybe I need to save onto some money because I have a big project I want to take care of. It works pretty much like your checking account works, just 17 times. And it's got to meet a format that's required by the state that complicates it when we start shifting money from pocket to pocket. Does that count as a revenue? Is that part of the 10? Oh gosh, wait a second. So now we kind of confuse it a little bit, but we're going to shake all that stuff out. And if you can get that equation right there, we start with something, we project to bring in new money, we project to spend it, and that's what's going to be left over. Now you can kind of see where any guess we make now that we were wrong at messes up the math, doesn't it? If I only collect 8, actually, am I in trouble? You betcha. Because you can't end at the end of that equation with a negative number. In fact, there's a saying we go by. It's called brackets are bad. When there's a number that's got brackets around it, not good. If I put brackets around a number in my checkbook, that's not good. If I've got a minus sign in front of it, that's not good. It's not good for us because we're not allowed to do it, first of all. We're not allowed to run a deficit. Now, that doesn't mean that we can't temporarily go into a deficit and then fix the deficit with something by transferring money or by making a budget amendment, but you can't end the year in a deficit. You've got to go to 0 or some positive number. So it's not that complicated. Now we just have to figure out, okay, which pockets do we want to talk about, and let's go see what we did with those pockets. So let's flip a page. And let's go talk about one of our big pockets. One of our pockets is known as the general fund. And again, remember, this is June of 19 when you're adopting the 1920 budget. So you're having to look ahead a month, and really 12 or 13 months, because you're trying to figure out what that math equation is going to look like. And so here's what was adopted in the budget document that you adopted, shaking out all the transfers between the pockets except for one, which I'll talk about here in just a little bit. And so I've done this in millions of dollars so we can kind of keep it simple. So here's what the government thought that the general fund pocket was going to begin the year with, which was $5.8 million of fund balance. And again, I don't know how to describe fund balance other than to say it's almost cash, but not quite. It's cash and investments that are liquid that could be cash, or anything that's going to turn into cash within the next month or two, minus anything that I'm about to pay out in cash. So it's kind of a net cash approach, if you think about it. But really, the only reason you have cash is that you must have collected some revenue in a prior year that you didn't ever spend. Otherwise, you wouldn't have any cash, right? If I collected $1 in year one and I spent $1 in year one, how much cash do I have? None. So the only way you have cash, or the only way you have fund balance, is that you must have earned some revenue that you never did spend yet, which is okay, remember? We're allowed to do that. So we've got $5.8 million, roughly. That was the projection that was adopted in the budget. Now, again, I'm not talking real numbers yet. I'm talking guesses. This is what was guessed at in June of last year. Actually began in February of 19, working all the way up to June. So 5.8 million with a projected revenue collection of 9.2 million in this pocket. Except, there's a little trick here, 2.2 million, roughly, of that 9.2 includes a transfer from one pocket to the other. Our two pockets, our big pockets, are the general fund, right? And the Bethany Public Works Authority. That's where the bulk of all of our expenses are running. And so the Public Works Authority subsidizes or reimburses the general fund, because in reality, the general fund has a lot of time that's being expensed in the general fund, like let's say the city manager's entire compensation is being paid out of the general fund. But in reality, probably spends half his time working on Public Works Authority stuff. And so the general fund receives a transfer, a reimbursement, if you would. And that's about 2.2 million of that 9.2 million. Now, the general fund projected it would spend 12.1 million. So you do the math, 5.8 plus 9.2 minus 12.1 leaves us 2.9. Now, if that actually occurs, what have we done to this pocket? We have literally drained it by half, correct? We started with 5.8, we're going to end with 2.9. How many more years could I do that equation in this pocket? 1, right? And then I have nothing at the end, and then I'm now having to make some really critical decisions. So this is what was adopted. And again, I've removed the transfers that cancel each other out because I can get even more complicated. But the general fund receives all of the sales tax. It then transfers it from the left pocket to the right pocket. The right pocket then says, I don't need it, so I'm going to transfer it back to you. Why would you do that? Well, the left pocket went to the debt market, and in order to sell the debt, had to pledge other monies beside the utilities for the payoff of the debt. Even though the utilities are more than sufficient to pay off the debt, no one would want to buy the debt unless there was some additional insurance. The additional insurance is that transfer. So literally, the tax commission sends us millions of dollars in this pocket. In fact, I would imagine that of the 9.2 million, about 5 of it is sales tax. So the sales tax comes in this pocket, we transfer it over to the other pocket, this pocket says we don't need it and transfers it back. Both of them count as revenue, but I didn't want them to count in the equation because that kind of grosses everything up a little bit. And so we're going to look at both the left pocket and the right pocket, and we're going to combine the pockets. And then we're going to see what the pockets are actually doing through November to see whether these equations are holding up. It's as simple as that. So not much crazy math here. I think if you look at the two middle buckets, we're at 9.2 of collection of revenue, 12.1 in the collection of expense. So that's about a $2.9 million difference, right? We're going to spend $2.9 million more than we collect this year, but we're safe, right? Because we've got it in the front. Except that, well, that doesn't leave us a whole lot. So that causes some problems for us if this actually occurs. What we're hoping for is that maybe we started the year with more than 5.8. Maybe we're going to collect more than 9.2. Maybe we'll spend less than 12.1, and we'll end up with better than 2.9. But that's not what we planned for. The budget was planned to basically deplete the left pocket by half. So let's go to the other pocket, the Bethany Public Works Authority. This pocket was basically planned in 1920, based on the adopted budget, to start the year with about $4.3 million. And even though it may have more cash than that, some of that cash is restricted. In other words, you can't touch it. It can only be used for debt service, or it can only be used for something else. So we're talking about $4.3 million in unrestricted cash. In other words, something that's there that you can actually use. So start with 4.3. We project it that Bethany Public Works Authority would collect 8.1 million, and then it was going to spend 9.7. So the math then basically knocks our 4.3 million down to 2.7. But remember, in that 9.7 number is a $2.2 million subsidy from the left pocket to the right pocket. So again, we'll kind of remove that when we look at the two pockets together to kind of get a better idea. So if I looked at the two major pockets alone, and I said, well, it looks like we're really planning on draining those two pockets by quite a bit this year. So how much does it look like together? Here's what it looks like together. If you added both the left and right pocket together, and you basically remove the impact of the 2.2 on one side and the 2.2 on the other, here's what we basically just said. We're going to start with a little over 10 million, collect a little over 15, spend 19.6, and end with about 5.6 combined in those two pockets. Remember, I still have 15 other pockets that have cash or fund balance that I'm going to appropriate and spend, but that money is restricted. It can't be spent for just anything. It has to be spent on its narrow purpose. This is just our two main operating funds. So right away, based on the budget as it looks like we're planning to deplete roughly half of our carry forward, leaving the other half to last how many more years? Well, at this pace, it would last roughly one, or maybe a little over. That's a little bit concerning. Now, let's go further. Let's look based on what's actually happening and what's happened in fiscal 18 that then got carried forward to 19. And then let's look at 19 that's getting carried forward to 20 and see whether we can match up our equations and see what's happening through roughly the first 5 months. We'll do that here in a second, but there's one thing that we have to talk about before we go any further. Now, if you go back to the previous slide, remember how we talked about the right pocket, the general fund, of roughly estimating it at 5.8 million to begin the year with, then the 9.2, then the 12.1, leaving us with 2.9. Based on what we're seeing in fiscal 18 and fiscal 19, there isn't 5.8 million to begin the year with. There was only about 300,000 in the right pocket. In other words, it was off about $4 million. And it somehow got off in the math related to the transfers and how it goes out, it comes back in, it goes out, it comes back in. There was basically an error. So the general fund didn't get to start the year with the July 1, 19 year. It didn't start with 5.8 million. It only started with 300,000. Now let's do the math. What happens? Collect 9.2, spend 12.1. What did I say you can't do? You can't have a minus sign, right? You can't have a number in red either. That's another one that goes. Red numbers, brackets, minus sign. So through basically just looking at what we started with, if this year came true, what would this look like at the end of June 30, 2020? It doesn't look good, right? It looks bad. So you can't let this happen. Now there may be some reasons for this. And again, you just can't let this materialize. You can't, in the general fund pocket, collect 9.2 and spend 12.1 this year because you're going to end with negative money, negative fund balance. So we're going to have to figure out a solution for that. And so we'll see what that solution is here in a minute. We're not going to have to do another slide for the BPWA simply because the 4.3 million that I said we were starting with, or 4.6 million that we were starting with in the BPWA, that 4.3 million right there, it actually held up when I looked at it, so it really is beginning at 4.3. So let's take a look at the two pockets together now. And the only thing I've changed is the starting number, because we now have a better feel for what those two pockets carried over from the end of 19, and it's not 10.1 million, it's 4.6. Now let's look at the math. Start with 4.6, collect 15.1, spend 19.6. That leaves us with what? Roughly $100,000. Might as well be zero. It's closer to zero than it is anything else. So we can't let the two pockets do this, simply because if you do, yes, you haven't violated the law, but you've left yourself absolutely nothing, or literally next to nothing, to do next year's budget, which you're going to start working on here in a few months. February of 2020, we're going to have to start planning the 2021 budget that will go into effect July 1. I don't think you want to carry over $100,000 of operating revenue in between the two pockets combined. So, tough choices. How do we affect this equation? I just told you, you can't change the first number. What about the second number, that 15.1? Can we change it? What did I tell you your two main sources of revenues were? Utilities and sales tax. Can you do anything about sales tax? Probably not. Not without a vote of the people, right? Which then takes a couple months, then a couple months to go into effect. So even if you were to vote another portion of a penny sales tax for operations, it's not going to help you this year. Do you control that third number, that 19.6? Yeah, that's pretty much the only number you control, the expense side. You can control that 15.1 a little bit because you've got the ability to assess utility rates, to charge whatever you need to charge to pay for the service and to reimburse the general fund. But you can't do a whole lot about sales tax. And that's the bulk of that 15 million. There are court fines and interest income and investment income and zoning permits and building permits. But you know what? That adds up to about this much compared to the rest of it. So even though you get to control the equation, you don't really. You control some of it. And so to dig out of a situation like this, you pretty much have to work those two middle numbers, and I just told you that you can't really work one of them, so it doesn't leave you a lot of choice. All right, so as I said, there's that general fund with the 300,000. There's the utility authority. Let's walk through the utility authority. That's the good news so far. Now, by the way, let me tell you something about that 3.1 million on the general fund. We're still in the general fund, the right pocket here. The 3.1 million doesn't include any subsidy payment yet from the Bethany Public Works Authority. So remember how I said we've budgeted 2.2 million to send from the left pocket to the right pocket? Well, right now, at this date, at the November 30th date, there's no money. So in December, about a week ago, I believe, we went ahead and actually made that transfer. So if I ran these reports for a month later, the numbers are going to change because that 3.1 is going to grow by 2.2 million all of a sudden. And then that equation isn't going to be negative anymore. It's going to be positive. So the temporary deficit has been taken care of because the city went ahead and transferred the full amount of the budgeted transfer, even though we're only halfway through the year, or roughly halfway. So we can't count on the authority to send us any more unless we do what? We go amend the budget, and the authority has the ability to send more. But then at the end of the day, what are we doing? I'm just taking my phone from my left pocket to my right pocket Do I still have one phone, or do I have two now? Still got one. That's what we're doing here. We're just deciding which pocket's going to look healthier than the other, or whether we're going to split the health between the two pockets. And so that's what's going on. There's our equation of what's actually happened through November in the Bethany Public Works Authority. It's collected 3.6, but it's only spent 1.9, meaning that it started with 4.3, but now it's up to 6. But what did I just tell you? We just raised that 1.9 by 2.2 million. So now that 6 isn't 6 anymore. It's what, 3.8, roughly? I'm not good with math. I know that sounds bad, doesn't it? And so all we've done is shift money. So if we were to look at it together right now, here's what it looks like realistically. We combined that 4.3 million of the left pocket and the 300,000 of the right to start with 4.6. We've collected 6.7, we've spent 6.5. The transfer, 2.2 million, washes in both columns, so I took it out. And we've actually pretty much broke even so far through the first 5 months. But that means that the equation hasn't came to fruition yet of what was budgeted. So what needs to occur next is we need to start looking at the budget close and see which of these expenses are not really going to occur, which revenue streams might be producing more revenue or less revenue than what's estimated. In other words, we need to go proof the equations. And you can kind of proof them a little bit after 5 months, but I have seen a complete 180 in government accounting from the first 5 months to the last 7 months. So even if it looks like we're kind of treading water right now, your high utility months are over for the most part until we get into probably late May or June, which we won't actually get until July. We do have our Christmas sales tax month that'll hit us in either probably first week of February. We'll see the results of Christmas. But again, that's all dependent on how well people spend their money within the city limits, because it's sales tax, not property tax. So, I know my math is pretty simple, but here's what I think we need to do. I think we need to kind of go back to the drawing board, and we need to reproof the budget, especially in the two major pockets. It won't hurt to go pay attention and look at the other 15 pockets. But those, again, are kind of restricted monies. They have some money trickling in, but any money that goes out of those pockets have to be spent on something very specific. It can't just be salaries and wages, which is the bulk of the expense of the two operating funds. So we need to kind of relook at those priorities. It'd be great if we had a break-even year. But if we have a break-even year, then something in the budget equation didn't work, right? Because we didn't plan to break even. We had planned to really spend a lot more money than we were bringing in. Now, maybe that's not a realistic projection, and so that's why I want you to kind of relook at what's going to go on between now and then. And then even if we do break even, what do we end the year with? 4.6-ish in the two pockets combined? You know, that's not giving you a lot of cushion. That gives you about one more year of budgeting like we did this last year. So that's one thing. That's probably something you all need to do. One of the things that I think we're going to do is to re-verify those carry forward balances. I want to make sure that we're close, or at least close enough on our projections, that the 300,000 in the one pocket and the 4.3, we've done enough work that I'm pretty comfortable with it. But of course, we want to nail those down, because that's going to affect the equation that you're going to then use in February, March, and April to figure out what that number is going to be July 1. So it starts all over again. As the third bullet says, we'll probably re-verify the actual operating revenue and operating expenditures of the year so far. In other words, I want to make sure cash is reconciled. I want to make sure all the transfers have occurred that were supposed to occur, so that when I say through 5 months, here's how much we've collected and here's how much we've spent, that you can have some comfort that that's how much we've collected and that's how much we've spent. So I'd like some time to re-verify these. Again, This has been basically in about a week and a half of looking at this for the first time. Consider the need to rebalance the budgetary equation by really the only thing you can do is raise more revenue, cut back expense, or some combination of the two. In fact, that's the only way you can affect that equation. There's no other way to do it. And then I think we probably need to figure out, well, what is a safe, desired level of reserves in our two main pockets? What should it be? I can tell you state law and industry standards will roughly say, you know, take your total expense or total revenues of a year and multiply that by 10%, and that ought to roughly be the minimum you should carry forward. So we're somewhere around, what, 19 million, it looked like, of expense, so that's about $2 million at a minimum. 20%, much more comfortable, but once you start dipping below that, I've seen 10 and 15% fund balances wiped out overnight by one ice storm, one disaster, one issue. So we have to be careful in that we can provide the services that the citizens request of us, that we can effectively provide those at a cost-effective way and still leave enough cushion so that we can operate in the case of an emergency or an one-time expense that we hadn't anticipated pops up. And that's kind of where we're at. The budget, as it was adopted, literally gives you about a year, and that's about it. And then it just pushes what I say is a long-term problem into a short-term framework. I don't think you want to wait to decide what you're not going to buy once I tell you you can't buy it anymore. So that's kind of where we're at. And that's what I wanted to kind of clarify. I'm telling you, the budget document itself is 35, 40 pages long. And it's full of everything that's not an accountant hates. And that's column after column after column and row after row after row of number. However, if you can simplify it to the big picture, like we did here, it makes it so much more easier to do it when you apply that mathematical equation. And so that's what we're trying to do. I want everybody on the same page. I want everybody kind of focused on what's going on. And then I think we need to watch this month to month, because one bad month, 2 bad months, that 4.6 goes to 2.6. And then we're really in a big pickle. So that's kind of it. I thought maybe you might have questions or...
Yeah, I want to thank you, Mr. Crawford and Mrs. Wright, for coming out and simplifying it and really sharing with where the city of Bethany stands right now. I know there's probably a lot of questions and concerns, and we want to give people, because it is a public hearing item, to ask those questions, obviously, as well as council. But I would like to say that we didn't get to this point overnight, and we're not going to fix this overnight. This isn't a time of trying to place blame, but this is a time to find the solution and come up with exactly what he said, what we're going to do, the combination of things we're going to have to do to secure the health, safety, and well-being of our city and our citizens, because that's priority number one, and that's why we're here. And so if anybody has any questions, I would ask that you would ask those at this time from council, and then we will allow the public to ask any questions. Does anybody have any questions?
I've got one, Mr. Mayor. Thank you. Mr. Crawford, could you explain to us why we utilize the Bethany Public Works Authority and a general fund as opposed to having one single fund?
Let me give it a try. So if we go back 70 years, there probably was only one fund, and it was the general fund, and it ran everything. And that was the way for most municipalities across the state. There was no such thing as what we call a Title 60 public trust, which is what your Bethany Public Works Authority is. The problem 70 years ago was, as cities were trying to approach expansion, I need to lay 10 more lines of water, 10 more lines of sewer, they weren't allowed to go borrow money. In other words, cities are prohibited from borrowing money beyond 1 year of operation. In other words, this council cannot commit monies beyond the current fiscal year in the city. You can only do 1 year things. And so that wouldn't work. No one would be able to lay another area of water and sewer lines and pay it off in a year. So some attorneys got together, probably in the early 50s, and decided that they could use the state statutes to create another entity, a public works authority or a utilities authority that is governed by Title 60 and not Title 11, meaning that it does not have the debt restrictions that the Title 11 cities do. And so the cities basically leased or gave all of their utility operations to the trust. And then the trust was allowed to operate the utility system free of the cuffs that had been placed on it in Title 11. And so the cities, the utility authorities would go out and they would borrow money and say, we will pledge to pay this debt back with the new water and sewer revenues that are going to come in. And they would find willing bond holders, willing participants that would buy that debt. And so that's pretty much how it all started. Right now, you are two different entities that require two different funds, two different pockets of the pair of pants. Now, you in theory could literally operate the government with maybe those two pockets and then one other pocket where you combined all the other restricted monies and then tried to divide it with accounting and paperwork, how much money was in each line item or each purpose. But the government has simply done it the easy way and created these funds, these 17 or so funds. But by and large, the bulk of those two funds, the two pockets are the bulk of the activity. But that's why. That was probably in the early 50s when those Title 60 public trusts were created, so they could then go borrow money and then adjust rates and fees needed to pay back that debt and to pay the operations. So there are not many municipalities in the state anymore that run their utilities out of a general fund. Most of them have created those Title 60 public trusts. But it was created by statute. It can also be dissolved. The trust indentures could be absolved. You could literally take over the utility operations in the general fund, but that would pull you back under Title 11, which means that you can't have debt, which you do have debt, so that would be a pretty messy legal process. But that's why, in essence.
Thank you, Mr. Crawford. That was crystal clear till just the last few statements there.
Okay, well, good. I wasn't around when all that occurred, but that's what I've been told. So,
Anybody have any other questions?
Mayor? Did you look at anything beyond the current budget going further back, or did you just stick to where we are right
no,
now?
I tried to focus on what the current budget is requiring, or what the current budget was estimated, based on what I think we're ending fiscal 19 with, because I didn't see any need to go back further, because that's all passed. In other words, 19 has now superseded 18 and 17. So I don't really need to see budgets for 17 or 16 or 15 because they don't mean anything anymore, because we now have actual results. So I pretty much limited my look back to fiscal 19, which would have been July 1, 18 through June 30, 19, trying to figure out what that June 30, 19 ending number was going to be, and then the budget that you adopted this year. And then I looked at the first 5 months of actual activity that have occurred in 1920, which is just the last 5 months.
Okay. And in looking at that, can you give us anything in terms of looking at that big picture budget as far as how it might, what the different things that we're, like how much are we spending on personnel? How much are we spending on equipment and maintenance and those kinds of things?
I could probably not give you what I would say accurate detail, but I can broadly paint a picture for you. In other words, if you were to look at those two pockets and basically say, okay, we see roughly $19 million of expense in those two pockets, how much of that would be related to people? We're probably talking 75%, 80% maybe tied up in people. Now that's not just salary, that's salary, wages, overtime, insurance, health care, retirement, anything related to an employee or a person. But that's pretty common in Oklahoma government. So I would say roughly probably 75, 80%. I haven't looked at it any closer than that, so I wouldn't be able to tell you specifically. But that wouldn't surprise me if that's roughly the percentage.
Are there any other questions from council?
Question, comment. Moving forward, working on this, and I believe we've had it in the past, but can we get a report with all of our restricted accounts also and those funds balances? So the 17 other pockets, how much are in there? What's the restrictions on those accounts?
Absolutely. In fact, I think one of the bullet points I may have skipped over on the previous slide was I think we need to go back and re-verify what truly is restricted versus unrestricted, because we have seen, and even the state of Oklahoma Health Department is a great example of this, there are people that have classified certain funds as restricted at one point when in reality those weren't restricted and could have been used for anything. And then we've seen the opposite, where unrestricted money has, or restricted money has been used for unrestricted purposes. So I think one of the things we need to verify is that at June 30th, 2019, which again is the audit year that your audit is underway right now, that's going to verify what truly is restricted and unrestricted as of 19. I can tell you what's restricted as of June 30, 18, but again, that's almost 2 years ago. So now we're talking, we need to verify it as of June of 19, and then basically once we verify the first 5 or 6 months of activity of this year, I can tell you what's happened to those balances. But yeah, there's a list in the audit every year of which funds are restricted and which ones are in their own separate pockets and how much those pockets are. But the data you'd be looking at would be June 30, 18 right now, which is, I don't know if that's reliable enough to do you any good or relevant enough to do you any good since it's so old. But that's something that we do plan on doing also.
And then just to make a point, out of our $19.6 million, correct me if I'm wrong, we do not plan on spending all that because we do have almost $3 million of contingency, which we may not be using the right verbiage, emergency funds. That is broke down into several categories. So we were not planning on spending all of that.
There was a department, much like police, fire, streets, in both pockets, there was a entire department called contingency that I actually took out because there is no such department. That's kind of where we were using fund balance as a plug number, or that's how the budget was using it. In other words, that number wouldn't most likely be spent unless something had happened that we had not planned for. So since it wasn't really a real budget, I took it out of that equation. So it's not in, the contingency budgets are not in those numbers.
It's not in the 19.6?
No, it should not be in the 19.6. Let me,
It's
Yeah.
2.857 million.
I think 2.875 million in the general fund pocket was taken out, and I think 10 or 11 million, I think, was removed out of the Public Works Authority. Now, what I don't know is there a line item in every department? Like, here's the police line item, salaries, wages, gasoline, materials and supplies, other services charges. Is there a line item called contingency in every department that I would then need to go and pull out also? And I don't know if I looked close
think
enough,
so.
but I didn't think they were at the line item level. But I pulled every department called contingency out of those two pockets so that it wouldn't affect that equation.
Are there any other questions from the council before I give the public an opportunity to ask their questions? Is there anyone? Do you have a name? Is that? Yeah. And if you do have a question, would you please fill out your name and address for Mrs. Lamar? And we'll need you to step to the microphone so we can hear you. Yes, sir.
Good evening. I'm John Robinson, 3100 North Eagle Lane. And I just wanted to come up here and tell you how much I appreciate the amount of work y'all are doing. I'd like to volunteer to help Berkeley and the Crawfords with some of my prior knowledge. If that would be of any assistance in this whole process, I could work it into my really busy schedule. So if it would be all right with council, I'd love to volunteer. Okay?
Thank you.
Liz Sawyer, 31st in College. Not very long ago, you guys had a meeting where you discussed some of the utility increases that were suggested by a committee that was put together of citizens called the Leaf Group, led by Crystal Davis. It was, from what I understand, tabled indefinitely, up for discussion. Do you have any plans of revisiting when we might be discussing some of the solid waste rate increases?
I don't think we have a date, but that will obviously be coming.
I have a two-part question that may or may not have anything to do with this, not solid waste, but War Acres, when they were in a similar situation, looked to our neighbors of Oklahoma City for possibly subsidizing some of the police and fire in assisting during their time. Have we considered possibly seeing if they could help in those areas while we struggled with those departments?
There's nothing at
With-
this point off the table. We have to look at the safety and well-being and future of our city. Obviously, we do not want to turn over anything to anyone other than ourselves. We don't want to lose our autonomy, and we love our fire and our police. And that is, in my personal opinion, would be a
It would be
last-ditch effort.
temporary. I believe War Acres did bounce back, but if it would be something that could help us through.
I think it's going to take a multitude of combination of things that we're going to have to address in order to, again, look at securing the future of our city as being priority number one. Is there anyone else?
I want to thank you all for your candor and honesty. When I started going through the budget numbers that are on the website, things looked a little weird. And I was not getting answers. And this is pretty much what I had expected. I'm sorry that it's this way. The question is, you really needed to go back and find out why. I've heard about a $1.4 million error in the equity balance that was found during one accounting, and tonight we just heard about another $4 million bookkeeping error. That's not good. And City Manager Brown, I'm sorry that you have to step into such this mess. I do appreciate you coming on board. You cannot fix this with low-hanging fruit. You cannot fix this with sales tax. You can't fix it with increasing the waste costs because there's not enough accounts. The money doesn't add up. Even if you increase a $5 for the 1,000 gallons that you're talking about every month, there's only about 7,000 meters. That's only $250,000 a year, gentlemen. Please start learning to do the math. It's that simple. It's just like you said, add, subtract. There's nothing else to the accounting. If you're not getting the work that you need from staff for financial statements, fix it. I realize that's not a question, but I do appreciate you guys coming forward and being honest about what's happening.
Thank you very much. That is one thing that we always strive to be, is completely honest. And again, this is a road to a solution. Obviously, I mean, the city manager can address anything as far as what is going to take place looking into this and coming up with the why answers. And we are going to address this and we're going to move forward and we will fix it. And I agree with you. You can easily do the math and realize what you'd have to do to your utility rates to answer this question, and that's not feasible. And I appreciate you asking the questions at the last meeting as well.
I have Crystal Davis, Ward 4. I have 2 questions for you. The first one is I want to ask you specifically about the Freedom Festival. My understanding is it's roughly $20,000 for the fireworks alone, and then another maybe $60,000, $80,000 for everything else that's going into that. Where are we currently standing on this year's Freedom Festival?
I do not know what the budget was projected to be. Matt may be able to answer that. He is leading the charge on trying to bring the Freedom Festival back. However, that was, from the get-go, why we pulled that back was because of the amount of money that the city was spending on a one-day event that didn't make any sense 3 years ago. And so we're still addressing that. We'd like it to be volunteer-based because I think we can still put on a fabulous celebration for our freedom of our country. I will say I have heard it is about $1,000 a minute when you're blowing these fireworks off. And so, yeah, for about a 20-minute display, it's about $20,000.
Well, I know that we had I believe it was $10,000 from, was it OMAG, that we dedicated to the Freedom Festival a few council meetings back. Are we going to revisit that $10,000 and decide if that money should still be dedicated to the Freedom Festival or if we need to prioritize it in other ways in our budget?
I think we need, we brought that forward as a council to give towards the Freedom Festival to be used as seed money that would have to be used to be matched with contributions and donations. And so if you take that away, you may be taking away every other dollar, but everything's on the table, open for discussion. So if council wants to address that and talk about that in the future, we can do that.
Okay, and my other question I have is, in April, we passed a TIF in the city that was over 100. Does anybody have the exact number of that TIF? I forget how much it was. It was over $100 million proposed for that TIF. Has there been any discussion about going back and visiting that, given the financial situation that we're currently in?
What we approved were the TIF boundaries, not TIF development deals. No deal has been brought to the city. We established the boundaries so that it was more appealing to developers to want to come to Bethany and develop things so that we could hopefully generate more sales tax in the future. But we have to wait on a developer to bring a deal to the council that we would be willing to accept. And that has not happened to this date.
So it will be the council, if any TIF project is brought forward, it will be the council themselves who will vote to approve that money.
There'll be a public hearing, and then there will be a vote by the council if anybody ever comes forward with a TIF development deal in any of the TIF boundaries that we have set.
Okay.
Are there any other questions?
Good evening. Ken Smart, 4310 North Donald. I feel a certain responsibility here because I was here when this budget was presented. And I'm exasperated to the point that Berkeley and I presented this budget with about 2 months of preparation, and we were basing it on the previous year's budget. And what I'm hearing from Mr. Crawford is there was a problem with the transfers and the way those were calculated that dated back to 1718. Is that correct?
At least in the budget document.
So we were basing our budget based on faulty information. Right. Because I always think reasonable people make reasonable decisions based on the information they get. Berkeley and I presented what we thought was a reasonable budget based on what we had. You all adopted it based on the same reasoning. But my question is, if those transfers were not being calculated properly back in 1718, why was everybody not made aware of that? And why could we not have addressed it back then? I don't know what budget you were involved in doing the audit. I know that Ann Elfrink stood up here and made a presentation. I don't remember that being an issue. It would have been nice to be able to address it 6 months or 12 months ago. Okay, so anyway, that's my question is, I thought that's why we did audits.
I'll try to address that, as I'd mentioned early on in the discussion, the budget is just the plan. The budget isn't really audited. It's the actual numbers that get audited. So you may have planned to carry forward $8 million in the general fund at the end of 18. The actual carry forward was really $4 million at the end of 19. In other words, you had $8 million in fiscal 18, then the budget that you adopted and the actual results of fiscal 19 basically spent $4 million more than what was brought in. So that $8 million didn't materialize. It was $4 million. And so the $4 million is what got carried forward. Well, when fiscal 19 actually occurs, we drained the $4 million, $4.8 million down to roughly $3 million, or I'm sorry, 300,000. So you've had 2 years where, if you go back 2 years, you notice that you had about an $8.8 million carryover. But then 2 years of spending $3 or $4 million more than you earned has knocked that $8 million down to about 300,000. So if that's how the budget was being adopted, was based on what was the budget of the prior year. Once the actual year has occurred, the prior year budget is relatively meaningless, because now we have a real year of actual revenue and expense. So it almost renders what was budgeted in previous years a moot point, because now we have real data, we have real wages paid, we have real capital outlay, we have real materials and supplies expense. And so I'm not sure where the equation got messed up or how it got messed up exactly, other than in the column that I see in the adopted budget that goes back to actual 18, the carry forward that was being projected in 18 did not materialize at the end of 19. It was 4 million less, and that's roughly what has occurred, and why the general fund pocket only has roughly about 300,000 at the end of the budget process, using actual data through the end of June of 19. So again, budgets are a good historical tool to look at, but if you want to really figure out what we're going to spend next year, you need to look at what we've actually spent over a period of time and not exactly what was budgeted. And so however that process got evolved, and again, I'm not trying to say that it isn't complicated, because by the time you comply with the various laws about how the sales tax is pledged from one entity to the other, you do have money coming in one pocket, out of one pocket, into the other pocket, coming back to the other pocket, and it sometimes gets lost in the mix. I think one of those transfers went over one time too many and got counted twice, because they're roughly all around the same number, that 4 million number, which is about a year of sales tax. It's just a error. I don't know how else to explain it. So I don't know how far back the error would go, but it doesn't surprise me that there's some math issues and that it's complicated to understand when you see it in its form, because it doesn't lay out like the math equation that I just did. If budgets did lay out that way, they'd be a lot easier to understand, but they don't really present themselves like that. They go into a lot more detail, and it's a lot easier to be confused by it. So the end of the day results are, we don't have near the carryover that we thought after the fiscal performance of 19. So therefore, we didn't have the carryover to begin 19-20 with what we thought. So I don't know if that helps, but that's about all I can add to it.
Thank you. We have a city council meeting that starts in 10 minutes. I would like to close this meeting by simply saying thank you again for coming and simplifying this for, if not everybody, definitely for me. I'd also like to just say thank you to our new city manager, Brad Brown, for being able to see this and come to us and let us know that there is an issue here. And I would also like to say that, in all honesty, a very wise man told me today that the solution is very simple, but getting there is going to be difficult. But we can do it, and we will do it, because we will unite and we will get there. Simple as that. We have one option, and that's to succeed, and that's what we're going to do. I appreciate everybody for coming out, and again, please stick around if you'd like to enjoy the city council meeting at 7:30. And with that, this special called meeting is adjourned.